What is Meryl Witmer buying in 2014? I'm Jack Otter, editor of BARRON'S.com, and I'm here with Meryl Witmer, general partner at Eagle Capital Partners, and of course, a longtime member of the Barron's Roundtable. And I'll embarrass you by pointing out that you're also on the board of Berkshire Hathaway with Warren Buffett. So tell me, you've got, I always love your stock picks because you're not big on quantity, but you've got a pretty darn good record on quality. You've got one pick for us. What is it?
Yeah, now you learned that from Warren Buffett, quality, right?
Exactly.
So the one pick today I have is Wyndham Worldwide. WYN is the symbol, and it's a company that has three segments. It has a hotel franchisor business, which is an amazing business. They have a vacation exchange business, which is called RCI, also an amazing business. They both have returns on capital of over 20%. Returns on tangible capital. And then they have a vacation ownership business, otherwise known as timeshare. And we think it's cheap, and we think this is why there's an opportunity. We like all three businesses. The vacation exchange business also has very good returns, and I think importantly, people who buy the timeshares like having the timeshares. In fact, 80% of them re-up for incremental time. So, and we think that the timeshare business is hurting the overall value. So looking at the numbers, we think it'll earn about $7.50 a share. That's our target in 2 years, $7.50 to $8 in 2 to 3 years of after-tax free cash flow. And that's assuming management continues to shrink the cap the way they have. It also assumes some growth in the businesses. And if it does that, we have a target price of between 95 and 119 a share. It's currently about 72.
And so those earnings you mentioned, it's growing at roughly what kind of pace, the earnings growth? Well,
there's some cyclicality to it, so I hate to put a number on the growth, but we think 5 to 10% is a reasonable amount for the after-tax free cash flow now.
Gotcha. Now, this is not an unknown company. What do you think it is that the market doesn't like about the company that you think is actually it's missing? Well, what is the market missing here?
We think that the investing class is a little snobbish about that timeshare business, and they don't understand that for middle America it's actually aspirational to own a timeshare. And I think because of that they dismiss the business. Also, it has quite a bit of hidden earnings power with its excess depreciation and amortization and some other aspects to the business. So we think that's why it's undervalued. And also, they've really purchased in a lot of the cap. And I think that has gone somewhat unnoticed on the street also.
Thanks very much, Meryl.
Thank you.